Welcome back to Power Lunch. Time for a deluxe three-stock lunch. We'll get the stories on three stocks in the news, then get trading advice on each. Our trader today is Victoria Greene, CNBC contributor and CIO at G Squared Private Wealth. First up, Lowe's. Let's turn to Melissa Repko for more.
Hi, John. Shares of Lowe's are down slightly this afternoon after the home improvement retailer reported mixed results and cut its full-year forecast. The company beat Wall Street's expectations on earnings, but missed on revenue, and it warns sales will get weaker in the back half of the year. CEO Marvin Ellison told me today that low housing turnover and high mortgage rates have hurt demand, saying inflation remains high and big-ticket purchases are being delayed as customers sit back and wait for interest rates to fall. But he added that the company has not seen a dramatic shift one way or another in overall consumer sentiment. Despite a tougher backdrop, Lowe's has a few factors that may help it in the future. About 90% of its customers are homeowners, and they're in better financial shape because of sharp home equity gains. U.S. housing stock is aging, millennials are forming households, and baby boomers are choosing to age in place, driving demand for repairs and projects. And Lowe's is also attracting more business from contractors and other home professionals. Those pros tend to be steadier shoppers and bigger spenders, John.
Right. Thanks, Melissa. Victoria, can you buy Lowe's here?
No, it's a sell for me. Look, the numbers weren't that good at all. They also tend to slow down in the second half of the year, regardless of what the consumer's doing, because people aren't remodeling their homes as much. People aren't moving as much. If you think about over the holidays, November, December is not the time that people remodel their homes or that people pick up and start to move. The problem is that people aren't spending. It's not just about the home ownership market. It's about that DIY, and it got pulled forward during COVID. So everybody remodeled, everybody was repainting, everybody was redoing cabinets and flooring and the whole DIY boom. It pulled all of that revenue forward, 2019, 2020, 2021. Now they're done with the DIY, and that's what's killing them. Yes, they're trying to grow their pro market share, but that's only about 20, 25% of their revenues, and they're just stuck. The only thing that's working and growing is their hardline segment, which is the gardening and the patio furniture and things that people are still spending money on. I don't think you're in a trough here yet. It's not just about the consumer. It's about what the consumer is spending on, and they are not spending on big ticket items.
Let's see if they're spending it on big-ticket weight loss drugs. Eli Lilly is up 3% today, and Angelica Peoples is here with that story. Angelica?
Hey, Kelly, that's right. Lilly's saying that its weight loss drug cut the risk of diabetes by 94%. This 3-year study is showing the drug can help people with high blood sugar or prediabetes and stop them from getting worse. And 1 in 3 Americans have prediabetes. There aren't any drugs to treat it. So this could open up another way to use tirzepatide. Remember, that's the active ingredient in the obesity drug Zepbound and diabetes drug Mounjaro.
Not only do you lose weight, but that when you do on this medicine, it converts to health benefit. This is our 4th study this year that does such a thing. Here now we have pre-diabetes not turning into diabetes. Last month we had congestive heart failure, reduction of 38% in the risk of death, hospitalization, or other complications of heart failure. In April we had sleep apnea.
Rick's telling us the company plans to talk to regulators about next steps. The study also showing that people kept the weight off for 3 years. That could help support long-term use of the drug. Remember, Lilly's trying to convince people that this drug is worth paying for over the long run, and this is another way to do that, Kelly.
Indeed, it would be. Angelica, thanks. Let's see if Victoria thinks that makes the stock a buy here after all of the gains we've already had.
Absolutely. I think it's a buy here. It's easily $1,000 stock. I think you would have wanted to buy it at 800. You'll want to buy it at 900. And I still think you want to buy it even if it hits 1,000. Look, if you get pre-diabetic and you get insured for that, and so not only is it treating diabetes, but it's reducing the risk of diabetes. CEO said you're eating about 800 less calories. Obviously, that helps with the weight loss. They're keeping the weight off. You get into diabetes, heart-related issues. It's a huge market share and pushing more internationally. For me, this is a generational long-term hold. You want exposure to the GLP-1 medicine, and right now, Lilly is #1 in that space, hands down.
All right. And finally, Amer Sports jumping 9% today. Brandon Gomez joins us now with that story.
Yeah, hey, John, it's one retailer bucking the trend, at least in China, reporting strong revenue up 16% for Q2. The company that owns brands like Wilson Sporting Goods and Arc'teryx Outdoor Apparel, raising guidance for the year, now projecting revenue growth between 15 to 17%. Prior guidance was around the mid-teens. Worth noting, though, Q3 guidance did come in weaker than expected, so investors should keep alert as they continue to follow this company. Clearly, though, focused on that raise this morning as the stock pops. Look, it's been a disappointment since its debut back in February. Challenges in wholesale, especially in the U.S., with sales reliant on companies like Dick's Sporting Goods, where pre-orders have been soft. CEO on the company's Arc'teryx brand on the call this morning, saying it's early innings and Amer's sports portfolio is far from reaching penetration potential in all regions. Really talking about growth in the Americas there because China, well, it's been a bright spot for the company, outperforming other brands like Nike overseas, which reported double-digit declines in foot traffic. Well, Amer reported revenue growth of 53% year over year in that market. So, John, definitely one to keep on the radar.
Okay, Brandon, thanks. Victoria, should investors play ball with Amer Sports?
I like it. It's a small stock, 7 billion market cap, but I think it's a potential flyer on a new up and coming brand. Could it be the next Canada Goose? Could it be the next hot thing? They have some new brands. They love their heritage brands. They've got a really good foothold on the DTC market. I think it's fantastic what they're doing in China. They're hitting young, female, and wealthy and luxury in China. They're one of the only ones growing in China. For me, it's a little aggressive, might be volatile, could see this retesting the 17 highs. For me, it's a buy.